Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Euro-dollar. A bullish white soldier yesterday and a possible hanging man pattern after the previous session's indecisive doji cross. The base of the main action was on the previously combined resistance, now support, of the short medium moving average, currently at 108.30, the long moving average, currently 108.31, and the top of the dark blue highlighted upper time, currently at 108.24, of the late December 2023 to early March 2024 bearish Andrews pitchfork. It's been breached but not necessarily broken as yet. The top side was capped by an important 50% Fibonacci line for the whole of 2023 at 108.64, with the recently capping medium moving average below, nearby, acting as a reinforcement, currently at 108.72. The move higher, though limited, was a follow-on to last week's weekly key reversal up. Now further overhead, we have the important 50% Fibonacci line of the January 2021 to September 2022 move at 107.66, and the base of the recent action at the April 2020 low at 107.25. I've drawn a bright red bearish shift pitchfork for the same action as the bearish Andrews pitchfork, as I suspect the steeper bearish angle of attack may be ending soon and the bearish shift may be a suitable alternative. I'd pay special attention to the nearby upper time, that's currently at 109.09, and also the crossover of the times circled on or about the 26th of April and then the 9th of May. So far today, not much, still capped by the 50% Fibonacci line at 108.64. Cable, aka sterling against the US dollar. An indecisive spinning top yesterday. There was also a bullish engulfing pattern, if only just. We still have overhead the recent bow tie formation of the three moving averages, the short moving average currently 126.51, the short medium moving average currently 126.66, and the medium moving average currently 126.69, plus the September 2020 low at 126.72. Meanwhile below, we have support from the combination of the flatlining long moving average currently at 125.84 and the 50% Fibonacci line, the July to October 2023 move at 125.90. Now going back to the bow tie formation of the moving averages, these all entered in the right order and are seemingly exiting in the right order, so be on the lookout to see if the moving averages head higher or lower. At the moment we have one heading lower. Additionally, 15 to 20 sessions after the crossover, we may see a further move in the direction of the exiting crossover, thus between the 25th of April and the 2nd of May. Be prepared to possibly see the following: volatility, a change in trend, or a reinforcement of an existing trend. For the moment, we are still within the previously mentioned general congestion zone formed between December 2023 to January 2024, between the 126 area up to the 127 3/4 area. Further down, we have the lows of February at 125.32 and 125.15, the latter being the more significant. As if all this action and pattern building wasn't enough, last week was a weekly key reversal up as well, for which we have seen a limited move higher. So far today, a test high but pretty much a rejection of the overhead 50% Fibonacci line and long moving average combination, though not going anywhere right now. Euro sterling. A second consecutive indecisive pattern yesterday, this time an indecisive doji cross, coming after the previous session's indecisive spinning top. The open and close were right on the dark blue highlighted upper time, currently at 85.78, of the November-December 2023 bearish shift pitchfork, plus the declining medium moving average, which is also, well actually it's currently at 85.79, one tick out. Looking below, we have the combination of the short medium moving average, currently at 85.48, and the combined lows of December 2022 at 85.45 and December 2023 at 85.47. Overall, the market still remains within the breached but not broken purple highlighted late January small expanding wedge pattern, currently 85.33 to 86.31. I recently had highlighted the possibility of the two pipe bottoms, the one seen in mid-February and early March, might lead to speculation we may have a larger double bottom pattern formed with these pipe bottoms. However, this idea is rapidly disappearing due to lack of any incentive to carry it out. So far today, well, the market was just sitting on the combination of the medium moving average and the upper time, but it's sort of dipping just below it right now. US dollar against the Japanese yen. A second bullish white soldier yesterday and a follow-on to the previous session's counter-to-counter bullish harami. The base of the main action was on the August 1990 high at 151.58. Yet again, prices did not seriously challenge the recent high at 151.97. Still haven't done so today. Below is the congestion from late February between approximately 150 even to 150 3/4. It seems the top side is still capped by the same capping peak formed by the high back in November last year at 151.92. Beyond November last year's high, we have the middle time, currently 153.82 of the July to December 2023 bullish Andrews pitch hawk, which is highlighted in bright red on my daily chart. Overall, we are still within this bright red highlighted pitch hawk, the lower time below, currently at 146.63. Now we are also still within the larger purple highlighted February 2022 to January 2023 bullish shift pitch hawk, in between the middle time overhead, currently at 159.13, and the lower time below, currently 145.05. Well, so far today, a small attempt higher, but once again getting capped. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow yesterday, after a schizophrenic series of patterns during the previous session, consisting of an indecisive spinning top that was also a key reversal down. The downside dug for a second consecutive session into the extension of the lower trend line of the mid-January to early April ascending triangle pattern, highlighted in dark blue, currently at 724.49, closing just below it, but supported for a third session by the extension of the upper trend line, currently 723.71, and reinforced by the flatlining long moving average below, currently at 722.98. All this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all. As though it did not show it here on this chart, there were also monthly key reversals up for March in USD CNY, the onshore Chinese yuan, plus, that's the spot there, plus monthly key reversals up in March for the USD CNY 1 month NDF and the 1 year NDF. All these are quite significant, especially if you have follow-ons. Overhead, and now moving some distance away, we have the capping action of the neckline, currently at 729.91 of the bright red June to July 2023 head and shoulders continuation pattern. Okay, so 3 weeks ago I laid out some potentials below for the then break out lower from the ascending triangle pattern. Thus the primary target X is down in the 716.05 zone, for secondary harder to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I will keep those targets on my daily chart, as we already have had a false break lower and now I'm forced break higher as well. So as I say, I will keep them on for now, but I am happy to retire them in a heartbeat. But, and it is a big but, I'm also mindful of the potential top side from the recent move higher. So for good order's sake, I have marked for now a primary target X2 top side for a continuing move higher at 730.05. The much harder to reach target X3 is up at 732.80. So far today, well, a small attempt lower and then higher again, but not going anywhere really at the moment. US dollar against the Mexican peso. A second bearish black crow yesterday and also a second consecutive close below the dark blue highlighted lower time, currently 1648.49 of the December 2023 to January 2024 mildly bearish shift pitch hawk. Additionally, prices closed for a second consecutive time below the December 2015 low at 16.46 and for a first time below the November 2015 low at 16.3508, also piercing and closing right on the October 2015 low at 16.3168. Further down we have the August 2015 low at 16.0838 and congestion at 15.9965. Now so far today, a move below the 2015 low, but seemingly limited so far, though it is a new low, one not seen since 2015. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.